Assalamualaikum everybody. Welcome back to my channel Rapid Revision. Today the paper that I'm going to solve is February March 2024. Question number 1 is based on 3-column cash books and it is pretty simple. We'll just read the question together. Gurjeet is a trader. During January 2024 the following transactions took place. January 4 cash sales 640 were directly paid into the bank account. The double entry for this would be bank debit sales credit, so hence this will come on the debit side of the cash book. So when we make the cash book, we record this on the debit side. We'll write here January 4, so I'll write here January 4. I'll write here sales and I will write 640 in the bank column. Then in the next transaction, they are saying paid Sandy 551 by credit transfer, having deducted 5% cash discount. So whenever we are paying someone by credit transfer or by the means of check, but let's say whenever we are paying, right, so whatever amount we are writing on the check or whatever amount we are sending through a credit transfer, this amount is after cash discount. So 551 is the amount after cash discount, which is going to be 95% in this case, because cash discount is 5%. So total we have 100%, right? So the original amount is 100%. The amount after cash discount will be 95%, which is 551 in this case. So if we calculate 100% of this, we will get x is equal to 580. When we cross multiply, we'll get $580. And what we are going to do here is 580 minus 551 is the discount that we are receiving when we are paying the amount to Sandy. So 551 is what we are paying. So on the credit side, I'll write here Sandy, and in the bank column I will write 551. In the discount received column I will write $29, because 580 minus 551 is $29. And this is going to be January 7, so I'll write here January 7. The next transaction says here, whenever we are paying to our trade payable, so when we are paying Sandy's account will be debited, bank account will be credited, also discount received account will be credited. The next transaction says here, paid cash 120 for wages. So when we'll record this on the credit side, I'll write here January 13, I will write here wages, and I will write 120 in the cash column. In the next transaction here, they are saying received payment by check 415 from OMA. So this is what we've received from OMA, and you guys know this, that whenever we are receiving money, we record this on the debit side of the cash book, and whenever we are making payments, we record this on the credit side of the cash book. I'll write here OMA in details. In the bank column, I'll write 415 because we have received in we've received by check. So a check is always increases the balance in the bank, because check we'll deposit it into our business bank account. In the next transaction, we are paying someone some amount. So again, we are paying $194 by telephone transfer in full settlement of an invoice of 200. So we were supposed to pay Viraj $200, but rather than paying $200, we are paying Viraj $194 by telephone transfer. So this I will record on the credit side of the cash book. I will write here January 21. I will write here Viraj. I will write 194 in the bank column, and I will write $6 in the discount received column. In the next transaction, this basically the last transaction here is a contra entry. I know this because they are saying here withdrew cash from bank $100 for business use. That means cash account will be debited and bank account will be credited, because we are taking out money from the business bank account and basically putting it in our cash drawer. So what I'll do here is I will credit the bank account. I'll write here $100, and in the details I will write cash, because this amount is going to the cash account. And because this is business use, that is why you are going to you don't debit the drawings account in this case. Most students do get confused here, and then what they do is they basically credit the bank account, and in the details they write drawings. But that is going to be wrong, because whenever it's drawings, they specify it by writing this term, which is personal use. but this, they are taking out money for business use. So this is going to be cash account is going to be debited, business cash account. So we are basically putting the money in the cash drawer. So we are crediting the bank account by $100 because they are taking out $100, and we are going to debit the cash account by $100. And in the detail, I'm going to write here bank, and this is going to be January 25, and also here we'll write January 25. So that is it, and this is basically my contra entry, so I can write C in the brackets. This is going to be contra entry. Contra entries come on both the sides of the cash book, especially in this case. There's another contra entry which can come in any scenario, which is when you have excess cash in your drawer and you put that into your business bank account. So it's going to be opposite of this particular entry. In that case, you basically debit the bank account, and in the details you write cash, and you credit the cash account, and in the details you write bank. But over here we are crediting the bank account, and the details we are writing cash, and basically the money in the bank is reducing, and we are putting this money into the cash account. So the cash amount is increasing in our basically cash drawer of the business. And then we'll calculate the balance carried down. So I'll write here January 31. I will write here balance carried down. I will write for cash, this balance carried down is going to be, so for cash is going to be, on the debit side it's 175 plus 100, on the credit side it's 120. So basically this is going to be 275, and 275 minus 120 is going to be 155 is my balance carried down. The bank total here is 2545, and the credit side total for bank is basically 845. So now when you are going to calculate 2545 minus 845 will give us $1,700. Now these are our balances, and obviously we have positive balance in the end also, and we had positive bank balance in the start, at the start as well, because it was a debit balance, and now it's a credit balance carried down, so that means it becomes a debit balance on February 1st 2024. So I will simply balance this. I will write here 275, 275 on the credit side too. The bank balance, I will total this 2545, 2545 both sides, and this balance carried down will become my balance brought down. So I will write here balance brought down. I will write here 155 in the cash column and 1700 in the bank column, and this I'll write here 1st February 2024. So that's it for my cash book. This is pretty easy. You can still manage to get full marks in the cash book because it's the simplest question. Also, this is the often repeated question. If you look at the exam past papers, you will often find 3-column cash books as question number 1. The next part here says complete the following table by placing a tick in the correct column to indicate whether each item would be used to update the cash book or would appear in the bank reconciliation statement. So this part specifically is about bank reconciliation statements, and you guys must know that there are certain items which are recorded in the bank statement, but we haven't recorded them in our cash book. So what happens is that when we receive the bank statement, we discovered that there are certain items which we did not record in our cash book, so we need to update the cash book for them. So if there is a bank error, so bank error, this error the bank has made, we haven't made this error in the cash book, so we need to record this in the bank reconciliation statement, because everything that the bank hasn't recorded. So there are certain items which we have recorded and the bank did not record them, so we basically write those in the bank reconciliation statement. Similarly, if there is an error made by the bank, you correct that in the bank reconciliation statement, because it's the error made by the bank, it's not an error made in the cash book. If it's an error made in the cash book, you always record that in the updated cash book. Check from Omar dishonored. So basically whenever we get a check, right, so when we receive the check, we did bank debit, Omar credit. That is when we receive the check, right? Since we also recorded this transaction when we received a check from Omar, we basically, it's on January 19, and we record this transaction on in the on the debit side of the cash book. Now when it gets dishonored, so the bank knows it first, right? So the bank is the first party who knows that yes, the check has been dishonored, because the bank would know, because when they were actually trying to undertake the transaction of, the amount being transferred from Omar's account to our account, then the bank got to know that, oh, there's no balance in Omar's account, so there's insufficient balance in Omar's account. That means the bank statement shows the dishonor check, but we did not know about it, so we have to update the cash book for the dishonor check. So I'm going to take the updating cash book column here. Bank charges. Bank automatically deducts charges from our account because they are giving us a service, and they'll charge for their service, right? So bank automatically deducts our amount in the bank, and it shows on the bank statement that a certain amount has been deducted as bank charges. Now we only get to know about the bank charges when we receive the bank statement, and at that time when we receive the bank statement, we get to know that how many, like what's the amount of bank charges which the bank has charged us for, basically for their services. So I'm going to take the column here, updating cash book for bank charges. The next part here says Gurjeet is considering paying amounts of less than $20 via petty cash. So petty cash book is another book of prime entry in which we record small cash transactions. So what he is considering here is that he wants to pay amounts of less than $20 via petty cash. He would pay all larger amounts by bank transfer or card payment. He would also require his customers to pay all amounts due by bank transfer or card payment. Gurjeet would stop issuing and receiving checks. So they're not going to make any transaction in checks. So they wouldn't give checks to their suppliers. They wouldn't take checks from customers. They wouldn't even uh, they would they would ask their customers to pay via bank transfer or through card payments. So what we need to do here is that we need to um, the proposal that they have given you in the statement above the question, you guys need to consider it by providing two advantages and two disadvantages, or points for this proposal and points against this proposal that they have given in this question. So I have written this answer for you guys already. If Gurjeet receives all payments by bank transfers, there will be lower risk of cash being stolen, obviously, because there will be no cash on his business premises or office premises. Bank transfer is a more secure mode of payment. Yes, it's a more secure mode of payment. This will also save Gurjeet's time, as he will not have to go to the bank to pay in the checks. So he's not receiving any checks. He's just getting the payment automatically in his bank account. So he does not have to go to the bank to pay in the checks that he has received. So because since he's not receiving any checks anymore, bank charges for checkbooks may also reduce, because he doesn't need checkbooks anymore. He's not making any payments in check, like by check. So that means he doesn't need any more checkbooks, because he's just using his bank transfers for payments. Then they're saying, however, like I have written for you guys, however, many customers would want to pay by cash or checks, because many customers do want to pay by cash. Or many suppliers would want payment in cash. That is also true, because a lot of suppliers, they don't accept bank transfers. Also, the bank may charge for electronic payments that Gurjeet is using. So bank transfer is an electronic payment, so the bank may charge for these transfers. To make payments of less than $20 from petty cash, Gurjeet will need to appoint a petty cashier. So they'll have to have a junior member of staff who is given this task of maintaining the petty cash book, and also undertaking these payments, like undertaking these transactions. Like any of these transactions which are less than $20, the petty cashier will take care of them. I think he should also receive payments by cash and checks. That is true, because they shouldn't restrict themselves to bank transfers only, because customers do prefer paying in cash and paying through check. And it's not very good to restrict your customer in the mode of payment. We just want the customer to pay on time. That is the greatest achievement we can have as a business also, that the customers who the credit customers, they basically pay us on time. That's a big thing. But if we restrict them to bank transfers, that's not a very good thing to do. We just want the payments, so I think the payment mode should not be restricted to just bank transfers. Okay, so the last part says here that what is the meaning of the bank overdraft? So the bank overdraft is a short-term loan. It is a facility that the bank gives to certain clients because they allow them to overdraw their account. So in the end, we owe the bank. So the business basically owes the bank because it's like a short-term loan. Bank charges is basically a fees that the bank deducts from the account of the business for running the bank account. So to keep availing the services with the bank, the business will have to pay a cost of it, and that cost is basically service charges that the bank charges the business. So that's it for this question. I hope this helps you. Thank you so much for watching.